couple of weeks ago, I was invited to be a part of a webinar that talked about fires and what you need to do and what you need to know about what's going on in the summertime here in Florida, here on the west coast of Florida, specifically between Marco Island, Naples, and all the way up here through Tampa. Hey, take a look at this. You like the content, share it, save it, like it, subscribe. This is what we're trying to do, give you information. So take a look at it. I hope you like it. I know I did. Thanks.
All right, all right. Welcome, 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 everybody. I'm Sue Pinky Benson. If we haven't met already, I'm with Remax Alliance Group here in beautiful Naples, Florida, Southwest Florida. I'm going to introduce you to some of our other people here in a minute, but I just wanted to thank you so much for coming here this evening. We are going to dive right into this and wanted to let you know that as we go through this, if you can kind of hold your questions until the end, kind of make note of what might want to ask here and there. We might be able to take one in here there, but as far as like the entire time, like it would make our webinar go super long. So try to remember your questions as we go through it. I'm going to go ahead and share my screen. Everybody can see it. It's full screen. All good. Thumbs
All
up.
good. We
Thumbs
are
up.
good.
All
All
right, we
good.
got a thumbs up. Yay! Everybody can see the screen. Okay. All right. So this is tonight. We already saw this screen. We're going to go on. What are we going to learn tonight? Okay. There are super important things that you need to know before we start buying a house this summer. We're going to go over the buyer broker agreement. If you haven't heard about it, I'm about to tell you about it. The 2026 summer inventory and market is now the time to be buying a house in Florida. Let's talk about it. There's a lot of clashing headlines out there. Let's try to just dissect them a little bit. New construction versus resales. We've got them both here, and we've got something else too. So let's talk about that. Fees you'll see in Southwest Florida communities. Yes, there's HOA fees, but do you know what CDD fees are? What do they cover? How important are they? What should you know? Focusing in your search. So this winter, from January to April, which is what we call season here in the Southwest Florida area, that because that's when our snowbirds come down to visit. You may have been one. That being said, what we have noticed is that we have a ton of people that go, I want to buy a place somewhere in Southwest Florida. It could be in Sarasota. It could be in Lakewood Ranch. It could be Bonita. It could be Naples. It could be Marco Island. So we're going to help you kind of narrow that in to give you a better idea of how you should come up with what is the place you want. Do you want a condo, a single family home, a coach home? And then we're going to talk to our friends, Cheryl Stokes, who is with the mortgage company. So she's got some insight on those mortgage rates everybody's talking about, which, guys, the mortgage rates are what they are, and they are normal. Like, compared to some of the things we've seen in the past, no, they're not going back to 2 to 3%, And then we have our beautiful Monica Montel. Do I say it right, Monica?
Montiel.
Montiel. Is that
Yes.
French?
No. Spanish.
Oh, it's Spanish. Okay, so I
Yeah.
have to roll something, but there's no R there. So she is going to talk about insurance because, again, the headlines are like, you can't get insurance in Florida. Is that true? Absolutely not. But we're going to talk about what you need to know as we move forward in this market. Okay. All right. So one of the first things I'm going to tell you is that if you do not have my phone number, this is my phone number for y'all in your phone that says Florida real estate agent, my favorite realtor in Florida. Okay. You need to plug it in, save it for now, even if you're not buying this summer and you're thinking next year, then you know how to get a hold of us because you get a hold of me and I'm going to connect you with all these people here, including the fabulous Mike Baker, who I have not told you about yet. So we're going to connect you. And here's the thing. Let's say you decide that Southwest Florida is not where you want to be and you want to go to the Panhandle. I've got a partner in the Panhandle. If you want to go to Orlando, I got a partner in Orlando. We are going to hook you up with the right people for those areas. So don't worry about it. We got you covered. So just put my phone number in, Florida real estate agent, my favorite one. Okay. All right. So now we're going to start talking about who we are. Just a quick introduction, because I know when we go to these webinars, people be like, I don't want to hear from these people for hours and hours. So I'm going to sum it up. I've been doing this for a long time. almost 20 years, and I have sold from Tampa on down. So I grew up in Clearwater. I went to college in Lakeland and worked in Orlando at Disney World at one point, was a TV journalist. And my entire thing is I am very straight to the point. I'm not a sugar coater. I'm not a, well, let's just sit down and have a conversation. I am very straight and going to get there, and I am here to help you get to the closing table. So now I'm going to introduce my husband and my partner, Josh.
Yeah, everybody. My name is Josh. So I grew up in Naples. So I moved to Naples in 1985. My family's originally from Chicago. I was born in Florida on the east coast of Florida, but I've had my real estate license. I would say I got it in 2013 and then I went full time in 2018. But again, I play a lot of golf. I'm in a lot of these golf communities across Southwest Florida, and it's really from Naples to Bonita Springs to Fort Myers, even up to the Sarasota area. So I'm the buyer specialist on our team. So I take a passion in kind of diving into the MLS and finding the right property for you.
Yes, he's really, really good at it. Now, Ms. Cheryl Stokes, will you please tell us about yourself and your mortgaging expertise?
Yeah, I'm Cheryl Stokes with New American Funding. I have been living in and lending in Southwest Florida for 12 years now. I'm sort of known as the problem solver. I like to really help buyers figure out what their long-term goals are and how to get them there. That's pretty much the long and short of it. I have any way to help you get to your goals.
All right, Ms. Monica, you're up.
Hi, everyone. Monica Montiel. I am the business development manager at the Baldwin Group. I am originally from Miami and have been living in the Tampa area for the past 7 or so years. Been in the insurance industry now for about 13 years. So quite a bit of time. It's ever changing. So definitely here for any questions that you all have.
Awesome. Awesome. And then the fabulous Mr. Mike Baker. Now, Mike Baker is a real estate agent partner of ours. He is in our office and he is located in Sarasota. So he covers a different part of Southwest Florida. So we've teamed up because we have so many clients who cannot decide where they want to be. So we kind of go back and forth. And Mike has a partner too. It's his mother, who's 85 years old, and the woman is phenomenal. Okay. So, Mike, tell us about yourself.
Well, I too am a Florida native. I was born in Miami area, Broward County, and mom and dad moved over to Pinellas County when I was 3 and chose the idea that it wasn't wise to leave a 3-year-old in Miami alone. So they brought me with me. So I've been on the west coast of Florida since I was 3 years old. Raised in Pinellas County, lived in Tampa, lived in Sarasota, lived in Bradenton. I know the area. I was here before the I-75 went all the way to Miami. I know the area well. I spent 18 years of my life chasing a baseball field. I was a professional umpire, so I really call balls and strikes. I don't sugarcoat a thing. If I see something that's not right, I will tell you. I'm not going to sit back and tell you, let's think about it. I'm very similar to what Sue said. We're not going to talk about your feelings. We're going to talk about the deal to get done. We're going to find you the house that makes you happy in the area that makes you happy, whether it be Naples with Josh and Sue or anywhere all the way up through Tampa with me. Trust me, we know how to find the right area and we're good at it.
All right. All right. So let's dive in. My first question is, have you heard of the buyer broker agreement? A lot of people like that have not purchased a home in the last almost 2 years now. When it comes to coming out to see a home, before you can even see a home, you now have to sign an agreement with an agent before we can unlock the door and take you in. And a lot of people go, whoa, what's this all about? Why am I signing an agreement? This is because there was a major change in the industry. Let's see, it was August of 2024. So like I said, it's almost been 2 years since this change happened. And it is an obligation that we as professional real estate agents have to do. Josh, do you want to talk a little bit about it?
Yeah, and it's basically if you are going to tour a property, and this is across the country. So even if you're selling a home up north, those buyers coming into your property up in Massachusetts or up in Illinois or wherever it is, those buyers have to have a signed buyer's agreement with that agent to come in and tour your property. So it's when you're actually touring a property in person on a private showing, with an agent. And basically, it says that you are dedicated to an agent, and that agent is going to be dedicated to you as well. And it outlines how long you're going to be working together.
And so that is basically saying to you, you can have one agent per client. Okay. So if you've been one that has thought about shopping around agents and having multiple agents, and you can't do that anymore. You can only have.
Well, let me just say one thing real quickly there, Sue. Like for instance, in one location. Now we have Mike on the phone on the call here, so you could have an agreement with Sue and myself, say for Lee and Collier County, which is Fort Myers and Naples, and then you could have another agreement with another agent in another part of the state. So you could have a signed agreement with him up in say Sarasota or Tampa.
And I think what we have noticed when it comes to presenting these agreements to clients is they're okay with being dedicated to us. What ends up, and I'm going to use the word scaring them, is that there is a part where it goes over how a real estate agent is paid. Okay. It's going to have our compensation, which is a percentage, plugged into that agreement. Okay. All real estate agents' compensations are negotiable, but that's the part that scares you because you think as a buyer that you are going to have to pay our commission. I will tell you that in the year and a half, almost 2 years that we have had this agreement, that Josh and I, Mike, none of us have yet to have a seller not willing to pay our commission. Why? Because we know what we're doing and we know what to negotiate and we know how to present the offer to the client so they understand what they're doing. They're going to be paying our compensation. But because of these new changes, we have to put it in there. So you might say to me, "Well, I talked to an agent or I went out with an agent and she or he didn't make me sign anything." Here's the thing. You will find agents who are not going to follow the rules. And here's what I say to you on that. If they're willing to jeopardize their license by not having that agreement signed and not following the rules, what else are they willing to jeopardize in the entire transaction as you go through and make an offer? What else are they skimping on or not telling you about before you get to the closing table? So I always say take that into consideration. So before we can show you a property, and a lot of you are going to be in other areas, so up north, even me going out and doing one of my videos for you, you do have to sign a buyer broker agreement. If you're getting a mortgage, Cheryl, why is it important that that buyer broker agreement is signed?
Well, we are responsible for reflecting what a buyer is obligated to pay as part of their closing costs. So if they've signed a buyer broker agreement, and if you haven't had Sue or Josh or Michael negotiate your deal and you are now responsible for part of it, I have to have that agreement and I have to place it in your 1003, your application, to show that you're responsible for that payment at closing.
All right. Does anybody have any
And
questions with
yeah,
the
well,
buyer?
I was going to say too, and we're going to be discussing a lot of new construction here today as well. And rest assured that these new construction, these builders, they will indeed pay our compensation there as well.
All right.
And if you go to a builder, don't think that not going with a real estate agent is going to save you money because they're going to pay us and they're going to give you the incentives when we show up with you. And if we don't come with you, they're not going to give you what they would give to us. They're going to keep that for themselves. And remember, their agents are there working for the builder. That's why you need a real estate agent to help you go into the new construction.
Yeah, for sure.
We're gonna dive into that as we get into the new construction side as well. So as we start looking at like what's going on with inventory in Florida, what's happening with the market, here's what we're seeing on the ground. Okay. We have more inventory than we have had in a decade. So we are like, I can say for Naples alone right now, we are sitting at about 6,000 properties for resale. Okay. That does not include the new construction properties. Okay. So that is a lot. If we were to put that in context of where were we at the pandemic, we were at under 1,000. We were at like 800, 900 properties. Now, if we went back to before what we call those unicorn years of everybody buying a house in Florida, it was closer to 4,500 or 5,000. So we are definitely higher than we were during pandemic and a little bit higher than before. The biggest challenge that has come with the pandemic market has been sellers understanding the adjustment in prices on their resale properties because they're very hung up still on my neighbor got 1.5 million in 2021. And so they are still hung up on that. Many sellers are. Some are starting to come to the realization, or maybe they bought in 21 and they're understanding that they're going to be lucky if they got what they bought it for, and they may have to take less by the time they pay compensation and closings and everything else. So there is an adjustment mindset happening in the resale side. But what happens here, especially in Southwest Florida, because we do have a lot of snowbirds here, is that we have what's called the Great Summer Delisting. So if it didn't sell between January and April, many people start taking their properties off the market so they can wait until the fall or next season, and they take it off. And so the inventory will start to come back a little bit. All right. Does that mean that we are in a soft market? I would say we are in a softer market than we have been. It is much more of a buyer's market now. So we do definitely want to understand the motivation of a seller when it comes to presenting an offer to them, because if they don't have to sell, which is one of the big things in Southwest Florida, we have homeowners who are second or third or sometimes even a fourth home these properties are. If the seller doesn't have to sell and they just want to put it up for a good time and see if they can get the price that they're asking, then they're not going to be as motivated. And in areas like Tampa, where you have people who are relocating, right? We have them relocating to different areas. Then they are more motivated to sell because maybe they have a job that they have to go to or something. They're getting relocated to another area. But I'm going to have Josh talk a little bit here about the inventory with new construction and what we're seeing.
For sure. And I mean, with new construction, up and down, really all over Florida, there is just a lot of new construction getting built. If it's from Tampa all the way down to Naples. So it is adding quite a bit more inventory. I would say that is the one segment of the market that really is moving quite well. The builders, they're publicly traded companies, right? So they have to move product. So it is adding just really, at the end of the day, a lot of new inventory to the market. There's no slowdown at this point in the building that's going on across Southwest Florida.
One of the things that we are seeing with new construction is that their pricing is going up, even though they may be offering all kinds of incentives like pools and golf carts and all kinds of things, $10,000 towards closing costs. Josh and I and Mike are out at these new construction communities on a weekly basis. We talk to our builder reps regularly, and they will say to us, yeah, the prices are going up. Because right now, new construction, because these sellers, the resale sellers, still have this mindset of they've got to wrap their brain around what their house is now worth. Like they're still higher than what the new construction is. And when you look at it, a lot of times people go, oh, well, why would I want to resale when I can get a new construction? So you're going to see those new construction prices slowly start coming up, sometimes even more dramatically than you would think. But the resales are definitely an option that you should be considering. And we're going to get into what that looks like with the resales.
There's certainly a lot of negotiation room with a seller who needs to sell. And obviously having a professional, someone who knows how to negotiate and really prepare an offer, you can really find some really good deals out there.
So is waiting until the fall or winter the best idea? No, not necessarily, because like I said, we're seeing all kinds of really big incentives over the summer. It's also, like I said, this is the time of year when the sellers know snowbirds have gone back. So the properties, hopefully, that you're going to look at that are resales, they're more interested in seeing an offer because they have it up for sale, right? Like if the other ones wait till the fall or the winter, they may just be, let's see if we can get our number. Now, the difference is if you are looking at, let's just pick a community like Pelican Bay, which is in Naples, and there is a specific community that you want in Pelican Bay, and there is a specific type of home, then there may be more in the fall, winter that come on the market. But guess what? They know that, and the prices may be higher in the fall and the winter than they are right now. And one of the big things that we wanted to touch on too is a lot of our northern friends come and say, "Well, I got cash. Is anybody willing to make a deal?" We just want you to know that the mass majority of deals in Southwest Florida are cash transactions. Although we do love for you to use our friend Cheryl with the mortgage company. She's very good at what she does, and she can get you some great deals as well. I just want you to understand that, a lot of times people have the idea that if I'm paying cash, they're going to take $100,000 off the deal. That's not how it works in Southwest Florida. Okay. All right. All right. New construction versus resale. What does it all break down to? What do you need to know as we move forward? All right. Well, the very first thing, I just want you to kind of picture if you're thinking about Southwest Florida, all right, we have this big main drag called 75. It goes north and south. Okay. So when it comes to new construction, most of the new construction that you're going to see as you look at 75 is going to be to the east of 75. Okay. I'm not saying that they don't exist on the west side, but for the most part, these new communities are to the east. All right. And so when it comes to being east of 75, guess what? You're further from the coast, right? And Monica, what does it mean when you are further from the coast if you want to get insurance?
So new construction homes, you're definitely going to find more competitive insurance as opposed to an older home. From an insurance standpoint, the home is built to current building codes. So insurers know that these are more likely to, withstand a hurricane. The roofs are going to be brand new. The major systems, the electrical, plumbing, HVAC, all that's going to be brand new as well. These homes, they're typically, going to be built with stronger roof attachment methods, better wind resistance, impact rated windows and doors. So all this is going to affect, your insurance premium.
And the location of being further from the coast makes a
Mhm.
big difference, doesn't it?
Yes, most definitely. So as you're closer to the coast, it gets more and more difficult to obtain insurance. Not that it's impossible, but it's definitely more and more difficult. As you're closer to the coast, you're going to face higher insurance premiums, fewer carriers who are willing to write in those areas or, stricter underwriting requirements. And the reason for that is you have more wind exposure, more flood exposure because you are, you're on the Gulf, you're closer to the water. So there's, more chance of hurricane force winds, storm damage, storm surge, all of
And
that.
those are also older. Typically, they're going to be older buildings. So the condos are going to be older.
Mhm.
And then that's something that, and we're going to touch on the fees, but like with condo fees, and you see these huge fees, and you're like, well, I like this condo out on the beach. And you're like, what are the big fees for? Because all I see is this 1971 pool, which is nice, but I don't see all the bells and whistles. The odds are the mass majority of that huge condo fee is going to the exterior insurance of that building. Which means not the interior, right? Right, Monica? They're not insuring the interior, which is like if you've got a lovely Van Gogh or something hanging in your living room, it's not going to cover that.
Correct. The HOA policy is only going to be covering, the common areas, the building itself. Your actual unit, anything walls in would be your own personal HO6 policy. So anything walls in, your personal belongings, things like that, you would need your own separate HO6 policy.
All right. So with
And
new construction is going to be more up to code. You're going to have things that are hurricane resistant, like impact windows. A lot of the new construction are going to have impact windows. Does that mean resales don't have them? No, it means that they could have them, but we have to do a specific search to find them for you if that is something that is a requirement. Also, if they have hurricane shutters, that's going to help. But we're going to dive into that insurance later. But with new construction, you will see that it's going to be east coming down 75. Okay, so east down 75. When it comes to new construction, the best deals that we have seen on them are going to be on inventory or spec homes, which means they have either started or finished a particular floor plan. It's ready to go. So you can't go in and say, well, I'd like this one, but I'd prefer to have this type of countertop and I want a different type of flooring. That's not how it works. Okay. These are spec homes. They're already done. They've already decided, made all the decisions. And if you're good with that, you can get some phenomenal deals because they want to get rid of those. Those are the ones they want to get rid of. When you are building from scratch and you start going in and upgrades add up fast, like, I mean, I think there's like an automatic trash can in one of the builders that, it pops out. That's like $800 for that lovely upgrade. Okay. Like you start to see the upgrades happening, which is backsplashes, lighting, flooring. Your prices are going to start going up, and it is harder to get a better deal on those. Okay. So if you're looking to build from scratch, things you want to be looking at are like, what are the incentives? What are they offering me beyond the golf cart, right? Like, what else am I getting if I decide to build now? And with building, you got to wait. You're looking at least 9 months. Sometimes it's 12 to 18, depending on the type of home you're building, how big it is, how the community is doing. And one other caveat that I would say is that as we go into hurricane season, there can be a delay. And if you decide to build, let's say in June, and we get a hurricane, hopefully not at the end of July, there could be a delay before they can get back to building it. So just kind of keep those things in mind if you're thinking about building.
A lot of the new construction communities are going to be outside of flood areas too, obviously further east, and then they obviously bring in a lot more dirt and build those up in those communities. So that happens a lot of times. But yeah, for sure, the inventory and spec homes, they're looking to move product again, like I said. So they are willing to, and it's not necessarily on price, right? But it's the incentives. It's the incentives. Right now, I just got an email from a builder who said they're giving away free pools. They may give you big discounts off of the upgrades inside of a home. There's certain builders giving $100,000 off of upgrades right now. So there's a lot of things, and then obviously, Cheryl, with the mortgage rates, a lot of times they can buy those rates down if you use one of their in-house lenders.
But the thing with that, and that's what I was going to say, Cheryl, that's cookie cutter loans. And so you explain to them why sometimes you can go into a builder and just because of what they're offering, it may not apply to you.
Right. So every national builder has their own mortgage company, and they are going to offer you exceptionally low rates. They can do that because they have everything in house. They've got title, they've got insurance, they've got mortgage, and then they're the builder. They put it all in a package. But they are very cookie cutter and limited as to the programs they can offer. They're going to be the standard Fannie Mae, Freddie Mac. I have a W-2. I work a 40-hour job. That's what they can do. What builders can't do is help someone who has a problem. They're self-employed. They don't report a lot on their tax return, and therefore they need bank statement income. They are retired. They're on Social Security. That's not enough income, but they have lots of assets. There are a lot of buyers out there wanting to buy new construction that don't fit the mold. And then that's where we come in and we can offer those services. Now, builders can do two different things. Some builders will not continue to give you the incentives if you switch to a different lender. But many builders have in their contract, if they cannot provide the services that buyer needs, they will allow you to go to a different lender, but continue to give you the incentives as advertised. So it really depends on the builder which way they'll go, because often those incentives are tied to using everybody in their group.
But that's why we have.
I just had that same exact situation happen to a buyer of mine.
And that's why it's important to have an agent with you when you're at new construction to navigate things like this that you might not be aware of, other options, right? And understanding everything that goes into new construction. It's not just walk in and take what they say. So, we can definitely help you with dissecting that as well. One of the things that I wanted Cheryl to touch on as well, that a lot of people are surprised with when it comes to building a property, a new construction, that the closing costs, they often will put the carrot in front of you, which is a nice carrot, $10,000 towards closing costs. But Cheryl, why are the closing costs on new construction so much more?
Well, that's exactly true. So people will call me and say, well, this builder is giving me $10,000 towards closing costs, and now I don't have any closing costs. That's absolutely not the case. What you don't know is in that 200-page builder's contract, buried in all of those pages is lots of additions to your closing costs. There's a technology hookup fee. There's a water hookup fee. There's the initial CDD fee. There are all kinds of fees that typically add up amazingly to the exact amount of their incentive. But what that doesn't say is that you still have your closing costs like title fees, lender, title insurance, all of those other closing fees that you would have with a resale. You still have with a builder, and the builder didn't pay for those. The builder paid for the fees that they added on to you in the first place.
So you must keep that in mind when it comes to closing costs. And something else, like I touched on before, they're not as negotiable with the pricing as you might think, except for when we see those inventory and spec homes, but also the contract. Okay. So y'all, I know we all love our AI, our chat, our Claudes, whatever it is that you're using, right? Like I know we love them. We love them. And you're going to take that big old 200-page contract that Cheryl was just talking about it, and you're going to plug it into Chat GPT, and you're going to say, act like an attorney, and what should I be aware of in this contract? And it's going to spit some things out to you. You need to be aware of those. All right. However, I'm going to tell you from experience that these builders here are national huge builders with contracts that they've already put together. So the likeliness of you getting something changed in that contract because Chat GPT said it, or maybe you had an actual attorney who said it, is very unlikely. So what I think is that when you have those suggestions from Chat GPT that come up on the contract, that you say, okay, I just need to be aware of these issues as I move forward with this contract, because more than likely you're not going to get those things changed because it's a big contract that they have very solid written. Let's see, what else do I have here?
Well,
Custom.
there's also when you're dealing with the new construction, they've got fixed costs that aren't changing. Your lot space, that's a fixed cost. Now there might be different prices for different pieces, different lots throughout the community, but that's not included in your base price when you're looking at what the house is coming in.
Oh, yeah, for sure. And here's something else that comes with new construction. You're going to be dealing with new construction for a while, even if they're in phase 3. If there's a phase 4 and a phase 5, guess what? You still got 2 more phases to go. So that means you're going to hear the beep, 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 and the trucks, and you're going to be running over probably some nails while you're going through the neighborhood. They try their best to keep it clean, but we all know that it happens. But if the amenity center isn't done, you're going to be waiting for that amenity center. So they may give you a reduction in your HOA fees. Josh?
Some of these more elaborate amenity centers might take a couple of years to be built out. So just know that going in is, certain communities, it's just going to you're going to have a lot of construction in there, for potentially a couple of years until they're completely built out. And I can touch on this last one. I mean, there's several different ways. I mean, there's a lot of builders that allow.
I'm sorry,
Go ahead.
Josh. Before you go on, the other thing I want to talk about with the potential, not only for the community new construction that's happening, also, like I was going to give an example, there is a beautiful community up in Punta Gorda that's being built. And there are various communities up in Punta Gorda area being built right now. And they have some amazing deals. But the other thing besides the community being built is the infrastructure around it is also being built. So if you're okay going 10 miles to the grocery store because your grocery store isn't built just yet, but it's coming, that's something else you got to take into consideration, because there's houses up there that you can get, because it's a sister community. They might be 400,000 there, whereas in Naples they're 800,000 or 900,000, if not $1 million. So you can get a better deal there. But these are the things you have to think about and give a trade-off. Am I willing to trade off this for that? So Josh, go into the custom semi-custom.
It's pretty self-explanatory. I mean, there are custom builders that allow you to build everything, design the home, everything about it. Semi-custom, more like your Pulte. You go out and you pick the floor plan, but then you can customize flooring, colors, cabinets, and so forth. Bathroom things. For instance, though, if you look at like a Lennar type builder, Lennar which is one of the biggest builders in Florida. Lennar is just going to build product, and basically you do not have a say with what the end product is in a given home. I mean, you can certainly say, well, I want, a home that has potentially this color cabinet, because they will kind of pick and choose what homes have different color combinations. But if you say, or if you decide upon one home, it's really going to be, it is what it is.
So when he says it is what it is, I think a great example of this is, let's say you want a bathtub in the bathroom. Okay. Some people like bathtubs. I'm a bathtub person, but some people, they only want a shower. All right. But here's the thing, on some of these builders, because it is not custom or semi custom, they will say no bathtub in the master bathroom. Okay. So those are things, again, that you've got to start thinking about when it comes to how much customization do I want in my build? If I'm going new construction, do I have certain things that I want? Like some of them will put doors on the office space and make it more of a bedroom space. So there's certain things that they can change, and then there's a lot of things that they won't change. So you have to understand that as well. All right. Resales. So resales, these are homes that have been for sale. They've been around for a while, or maybe they're new. Well, we'll get into that. But resales, they are going to offer you established neighborhoods. So you're not going to be dealing with all the beep, beep, beep and all that stuff. Okay. You're already going to have the landscaping in, everything's going to look great. The amenities, the infrastructure of the accounting and the HOA, all of that's going to be put together, and it can be much easier flow in some cases. Okay. Your closing costs, as Cheryl was talking about, they're typically about 3% of your contracted price that you have on your contract, right? So if you were buying, let's say, $100,000 house, which, by the way, we don't have any of those, but let's say it was 100,000, 3% would be about $3,000 in closing costs. Okay, so that's on resales. Here's where it gets a little trickier when it comes to insurance. With resales, you have the potential for higher insurance. Monica talked about it a little bit there, where she was saying that if the house doesn't have hurricane protection in any way, no storm shutters, no impact windows, if the home is old and they have not updated that roof, which, here's the logic. Okay. We deal with sellers every day. Their logic is, I've lived here for 20 years. It's a tile roof. It's worked fine. It's not leaking. Why would I replace it? Makes sense. When you're the owner, it completely makes sense. But then they call Monica, and Monica is going to tell them what? Monica, you're going to say your insurance bill is going to be higher than the one next door who has a new roof.
Yes, most definitely. Carriers, the roof is one of the biggest things that carriers are looking at now. So if you are looking at one of these resale homes, you definitely want to be, taking into account their roof age, and inside too, the electrical, the plumbing, the HVAC, all that's going to have an effect on your insurance premium as well. And, the older that it is, or if there's been no updates, it can cause that in premium to be higher than if it was a new construction home. Not to say that you can't insure older homes, that the price is going to be astronomical. We insure older homes all the time, but you definitely want to be proactive when you are purchasing a resale and it has an older roof or older systems, because there are carriers that, will not accept it, or the premium will be higher. So definitely something to take into account when you are looking at these resale homes.
So when you're looking at them online, let's say you use Zillow, okay, or you're using us, whatever, a lot of times in the description of the home, if they've got a newer roof and it's a good agent, they're more than likely going to have that straight out in the description. I know when I'm selling a house, if I've got a newer roof in the last 10 years, I'm going to make sure that they know the age of the roof in there. If it doesn't say how old the roof is, there's probably a reason, and it's probably because it's older. Okay. But that doesn't mean some agents don't know to put it in there, But anyway, moving on. Negotiations differ. With builders, they're a machine, right? It's corporate America. They do this day in and day out. With sellers, there's more emotions involved. Oh, my children grew up in this house, and, it's really worth it because I have this view and my neighbor doesn't have this view, and I lived here and they didn't live here. I mean, I've heard all kinds of strange things, like I have an amazing ice machine and I should get 100 grand more for my ice machine in the kitchen. They're more emotional, and they can be very stuck on a number. And so there's only so much you can do to move that mentality of a human. I think we all, when we're buying, we forget what it's like to be the seller. And I think we always have to stop and say to ourselves, for example, I had a client recently and she's like, well, I had to take $100,000 off my list price. okay, to get the deal done. But when we were going to make an offer, guess what? She wanted to make an offer $300,000 less list price. She was offended by the $100,000 less that she had to take, but she was willing to make an offer of $300,000 less on the so you got to understand that humans are funky little individuals and we have this weird little brain set on things. But you really want to focus on the roof age, and also water heater age too, right, Monica? That comes up when it comes to insurance. Explain that a little bit.
Yes. So a lot of carriers now for water heaters are looking for a water heater that's 15 years or newer. Oftentimes, if you have a water heater that's older than that, that's going to have to be replaced before we can bind insurance. And a lot of carriers are looking at that right now.
All right, there we go. Storm protection, like we've talked about numerous times. The major components, your major components are how old is the AC system? How old is the water heater? What is the appliance age? You know, a lot of people here, they come here for January and February and they've owned the property for 20 years and they've only used the dishwasher a few times. Okay, it's still 20 years old. It's still a 20-year-old appliance, okay? Even if they've only used it once, it's still old. And just real quick, I just want to touch on as is and non as is, because as is verbiage in other areas can mean different things. But some people think as is, I shouldn't go there. There's something wrong with the property. That's not necessarily the case. It's a different type of contract that we use. And basically, it means you are allowed to do your inspections as a buyer. And if you decide through those inspections, and there is verbiage in there regarding what type of inspections, but if you do your inspections and you come up with something that you don't like about the property, it gives you the right to step out of that agreement. And it also gives the right to the seller to not have to fix what you find during those inspections. Okay. A standard contract holds both parties a little more firmly to the deal. Okay. And that can be very, very helpful in many situations. Okay. So I just want you to understand that when you hear as is, it's not necessarily a bad thing or the house has to be completely demolished and started over. We as agents can help you to understand that better. Okay.
The Florida as is contract is used in 97% of the transactions statewide. So that is I mean, it's used everywhere. Naples does have its own contract, which we can obviously explain down the road to you. But just to let you know that everything, for the most part, 97% of the times on an as is contract.
Yeah. Now, one great option, and Cheryl and I were talking about this the other day. Many of these new construction communities have resales already. All right. And as humans, I'm a big person on the psyche, right? What do we do? Well, why are they moving already? What's wrong with the neighborhood? Why don't they want to stay? Y'all, that's not your problem. Okay. These sellers are, because they're up against the new construction that's being built, they've got to be a little more negotiable on it, right? So they may have built and life changes. We all know life happens. So you might get an amazing deal on a property nobody ever lived in, or maybe they came down for one season and they decided, you know what, it's too hot in Florida. You know, I don't want to be there or whatever. And they've decided to sell it. These are a great option potentially. Don't you think, Cheryl?
This is absolutely my favorite topic because you can buy a 3-year-old home in the neighborhood where all that new construction is going on because they haven't finished the amenities and they're still building phase 4, right? But because they're competing with the new construction prices and they're lowering the cost, you're going to get a good deal on that new home. It's only 3 years old. It's going to meet all the insurance requirements. And guess what? You're not paying for all the hookups. The original buyer paid for all of that. So now you have lower closing costs, and where builders charge the buyer the full set of transfer taxes, that is not the case on a resale. So all the way around, you're getting a new house. The shrubs are grown. The window treatments are in. You're paying less in closing costs and less in taxes. It's the best of all worlds for a semi-new construction house.
And I mean, just to follow up there real quickly, is that some of these builders, it might take a year to build the home.
Yep.
And you can move in 30, 45 days.
And that's something important for people to know. The last webinar we did in December, a lot of our northern friends were surprised how quickly we close. So on a resale, typical closing or even an inventory home, right? Typical closings in Florida are 30 to 45 days at the outside. Okay. So I know in areas like New York or New Jersey, they have an attorney approval process and it can go on for months. That is not the case here in Florida. We like to get to the closing table as quickly as possible. Cheryl?
And we can close in generally 30 days or less. The other thing that I like, as I'm advising my buyers, is you can still get seller concessions on these homes as well, which is kind of like a builder's incentive, but it actually means something. Because this time when you get a concession, it applies directly to your costs. It can help you buy down the rate, or it can go towards your escrows, or it can go towards your closing costs. So it really is a really great way to buy a newer home in Southwest Florida.
And right now, with a lot of the builders that are going on, we got a lot of builders with inventory that have sold out. And so you go through a community that's got beautiful homes still with a lot of land that's still being built, but you've got some homes that are up for sale that people have in there for job reasons, for family reasons, for whatever reasons they're selling, they are selling. And so you can get in. I was out at one of our communities. They're talking 16 to 18 months right now for a build. And you can buy one of the homes in the community in 30 to 45 days.
Right. If you're relocating, you don't have 18 months. You have
No.
30 days to get your family moved.
All right. Let's kind of touch a little bit on these fees. Really important. Okay. If you're living in a community in Southwest Florida, odds are you're paying fees. I love it when people come to me and go, I want a condo, but I don't want to pay any fees. Yeah, I don't know what to tell you, my friend, because we don't have that. Okay. You're going to be paying some sort of fees. If there's a gate out front, you're paying a fee. Okay. Like that's the best way I can say it to you. But, there's very few areas that are completely fee free. All right. There may be ones that are higher, there may be ones that are lower. The more bells and whistles in the community. All right. The more I want the resort style. I need the really fancy pool and I want a waiter to come out and bring me a cocktail okay, your fees are going to go up. All right. If you want golf in the community, your fees are going to go up. Okay. Those are variables that are going to bring those HOA fees up. But here's what I want you to think about, because a lot of our northern friends go, "Oh my gosh, I don't have to pay anything up here." You are paying for things. All right. You are paying for things. And we were joking yesterday when we were practicing, because I say, if you're writing a check, do people still write checks? But if you're writing a check every month to okay, I got a lawn guy. I'm gonna write a check to him. Okay, the internet service, I'm gonna write a check. The cable, I'm writing a check. Oh, I go and work out at the gym, I'm writing a check. And then there's things up north that I hear that you have to take care of, like snow blowing. You're writing a check for that, and then you have to write a check for winterization of a home. I don't know what that means, but if you take all of those fees and you start putting them all together for the entire year, what does that come out to for you? Because down here, though, a lot of those are going to be covered in those HOA or condo fees, except for the snow blowing and the winterization. We don't have to worry about that stuff. Okay.
We throw that in for free.
Yeah, we throw that in for free. It's in there for free. So you need to really look at what are those HOA fees or condo fees covering. And we touched on it earlier. When the condo is like older and they were, say, built in 1970 or 1980s, they may not have the fancy amenities. And so some of those fees are still high. And when I say high, they could be $10,000 to $15,000 a year. And you go, what am I paying for? That is a very good question. You have to know that odds are it's going to be insurance, because if they're older, they're more likely to be closer to a flood zone or in an area, closer to the coast or something like that, or it's just an older building in general. So their insurance is going to be higher. They have to have reserves. So if they have not had enough reserves in the past, they may be making up for that and bringing in those fees from there. The next thing I want to talk about, because I know we're closing in on an hour here, CDD fees. These are community fees that a lot of people go, oh, these are the hidden fees nobody told me about. These fees have been around forever, guys. Like, they're not brand new. You see them in new construction communities specifically, and people go, what are these CDD fees? Josh, touch a little bit on what exactly a CDD fee is.
It stands for Community Development District, but basically what it is the builder takes out a bond basically to help fund the infrastructure, the building of, the streets, the roads, the lakes, everything like that. So and the CDD fee, all it is it's added into your overall tax bill. And there's a couple different portions of it, there is an operating and maintenance cost that basically will stay forever on the home. And then there is like a 15-year bond portion attached to the house that you just pay off over time. But you typically see these in a lot of newer construction. It's going to be your gated type communities. Don't be scared of them, because when there are these CDD fees, you know that these communities are going to be very, very well taken care of. Like Babcock Ranch up here, in the Punta Gorda area, has CDD fees. It's a beautiful community. So don't let it scare you too much, but CDD, it's just an extra added portion into your taxes.
So here's the offside of that too, is that some communities, like some of our GL home community, GL Homes is a builder here, they will say no CDD fees. So now you're like, okay, well, what was the C? So their tax bill, that means the tax bill may be lower for that
A little
particular
bit lower.
community because the developer already paid off that bond that Josh was talking about. Okay, so it is important to know about it. And when you see no CDD fees, that's what they're referring to. In some communities, the CDD fees can be much higher than they are in other communities. It all depends on what the developer put together there whenever they made the purchase or did the bond or what have you. Anybody else
Yeah.
want to add anything?
I was just going to say some of these neighborhoods that are still building, like a Fiddler's Creek, which has been around, 20 years, but is still under construction. One thing when you go to a resale is you will see on some of these resales that they're advertising that their CDD has been paid in full.
Have paid it off.
So
Yeah.
they've been around long enough that there is no CDD on that property because it's been paid in full by the current owner.
Yeah, and even a newer build, like there's a community here, Esplanade by the Islands. It's only been around for maybe about 5 years, but an owner can go in there and pay off the bond portion, and so it's going to reduce your overall tax bill versus, say, a condo right next door.
Correct.
And I can quickly just touch on those guys. I mean, HOA fees and condo fees, they can adjust year to year, right? It's not always set in stone that is going to be, when you buy a home or a condo, that amount is going to be the amount forever. Obviously, communities and condos will add new amenities or maybe an adjustment, or just overall cost, insurance cost might go up. So again, fees can adjust over time. And certainly once a developer leaves a community and turns it over to the owners, you might see some small increases there as well. So it's really always a good idea to review all the financials and budgets.
All right, Ms. Cheryl, tell us about mortgages in 2026. What do we need to know?
Well, the first thing we need to know is the sky's not falling. Interest rates are bouncing around like they always do, but rates are still lower than they were last year, and they're still lower than the overall average over the last 40 years, which is about 7%, and we're just under that. So while it makes sense to do some rate shopping, generally your rates are in the sixes, and that's where we're projecting that they're going to be for a while. It's important to understand when you're coming to Southwest Florida that your rates change based on the occupation of the home. Are you buying a primary home, a second home, a condo, or an investment property? The rates change with all of those designations. So remember that if you have a primary home in Kansas and you're buying a second home here and you want to know why your rate is a little bit higher, it's because it's a second home. Or if you're buying a condo, it's because it's a condo, and there are loan level of pricing adjustments on interest rates based on occupation. The higher your down payment, this has always been true, the higher your down payment, the better your rate. You can rate shop, but please compare apples to apples. Why go to a local lender like me versus a big bank? You need to make sure that when the bank tells you they're not charging you any points, that they haven't adjusted your origination fee to $5,000. I just had that happen this week. I had someone tell me that my rate was a half a point higher than somebody, and I gave them a par rate, meaning no points. Well, that bank had built in $5,000 in origination fees. So they bought the rate down. They didn't give that rate away at a lower amount for free. So always compare apples to apples, shop around, but have someone go through it line by line with you to make sure that you're really getting a good deal. Insurance is always required with a loan. You are going to get HO3 insurance with a single family home or HO6 insurance with a condo. There are two different designations. One is walls in, one is the entire structure. Remember, the insurance has to cover the rebuilding of the structure, not the land. So the insurance doesn't have to be the full sales price. It's all about the structure cost, the replacement cost. Flood insurance, and Monica can support this. I'll have you pipe in, Monica. So flood insurance depends not only on the flood zone, but if there's an existing flood policy that you can assume, you might save money. Or if the owner owned the property outright and didn't have flood insurance, it might hurt you some. Is that correct, Monica?
Yes, that's correct. So if the seller has a policy through the National Flood Insurance Program, so the federally backed flood policy, the buyer is able to assume that policy and take on the rate that the current seller has. And a lot of times it's a more affordable policy than if they were to get a new policy altogether. So it's definitely worth it to see if the seller does have an existing policy, because there's a good chance you can take over that and save some
Yeah.
money.
That's the first thing I always ask. Are we in a flood zone? I can look it up, but it's good to know when you're shopping. Just ask, are we in a flood zone, and does the seller already have a policy that might be assumable? Your earnest money is not your down payment. So a lot of people say, well, I put $10,000 down. That's my down payment. That is not your down payment. That is the deposit you have made to secure the contract and the property. And you're making that deposit when you go under contract. That deposit will apply to your closing costs and your down payment, but it is not your down payment. Remember, your down payment is going to be decided by the loan that you pick. It could be 3% down. It could be 5%. It could be 20%. That down payment is something you work out with your mortgage lender, but your deposit and your down payment are not the same, nor should you put your full down payment amount in earnest money. You never want to have that much money tied up as a deposit on a contract, because that is a fiduciary agreement that should you default on that contract, you can lose your earnest money. So you want to make sure that earnest money is reasonable, but it is not your full down payment. Seller concessions can help with closing costs. And I will say 95% of my deals right now have seller concessions of some amount. And this can help you do a temporary buy down, a fixed buy down. It can go towards closing costs. It can go towards escrows. So in a buyer's market like we have in our area, it is definitely worth at least asking for seller concessions. But what I always tell my buyers is to talk to your real estate agent and ensure that you're not over asking. Understand what the market will bear. You cannot, on a $300,000 property, ask for $50,000 off the top and 5% back in closing costs. That's not going to work. So work with the lender and the agent to understand where that happy medium is, so that we get you to your goals, because sometimes seller concessions are the only way you qualify, but you're not over asking and you're making a reasonable offer with your real estate agent. If you're thinking about a condo and getting financing, I will say that right now, this summer is a really good time to do it, because the guidelines are changing for condos over the summer and into next year. And when you're purchasing a condo, we not only approve you as financeable, we approve the condo association. Is it financially viable? Has it had a structural review? Has it had a reserve study done? Does it meet all the federal guidelines? If it does not, you can still get a loan, but you might have to go to another product, which is more expensive for you in closing costs. What you want to know is, does the condo you're looking at meet those requirements? In January, the reserve requirements for condos is going up by 50%, from a 10% reserve to a 15% reserve. What that means is many condo associations may not meet those guidelines come January 1st. So now is a great time to be shopping, because after the recent changes with condos and all of the rules changes, a lot of them are getting up to speed, and it might be a good time, if you're a serious condo shopper, to buy before those rules change again on January 1st.
Great information. And Cheryl is with New American Funding. She is a local lender. And I can't stress the importance of having somebody in the local market working on your deal because there are a lot of things with HOAs. Like HOAs, excuse me, you can have more than one HOA in a community. You can have a master HOA, you can have a secondary HOA, and there can be sometimes there's three different managing properties in a community. And if you have somebody from your big bank up in Illinois who's doesn't isn't aware of how these communities work, and I've had this happen, they get all discombobulated as we get closer to closing, and it's like, oh my gosh, what do we do to fix this? And it can be problematic. The other thing is, let's face it, when you have these big box places, they don't know you. They don't know you. Cheryl is going to know you, and she is part of our team, and she's going to help us get you to the closing table. And you're going to be personally either talking with her or somebody on her team versus I know you love your bank, you've been with them for 30 years, but they may not really know you and know what you're trying to do. So I always say, if you talk to your big bank, just talk to our local lender and have a conversation with her and just see what you think after you've had that conversation.
Yeah, it's kind of like the same thing with a builder. A builder is cookie cutter. It's a box. They have what they do and what they don't do. A local lender has more opportunities, is going to understand what your end goals are, and is going to work around those goals to make sure you accomplish them rather than just ticking off the boxes.
All right, Ms. Monica, I know we've talked a lot about this stuff going throughout the entire presentation. Monica's with the Baldwin Group, which is the insurance company for Remax Alliance Group that we use. Monica, tell us a little bit about what is the best bet. And I know we've already talked about it, but just kind of go over again. What are the best bets to get better insurance rates? Because I've heard that you can't get insurance in Florida.
Well, first off, I want to start off with a little bit of an update of what's going on in the insurance market. We get a lot of buyers reaching out and, they hear all the headlines, insurance is scary, we can't get insurance. And that's not the case. Yes, the Florida market has definitely had some difficult times in the past couple of years, but the market is stabilizing. We've had a lot of new carriers that have come into the market. Just in the past 2 years, we've had 20 new carriers come in. Just last week, 3 were approved. So there's a lot of interest in carriers writing in Florida, and that's creating more competition within all the different carriers. And, we're starting to see rates go down slowly. It's not a whole night and day difference, but we are slowly starting to see rates come down. We've had about 83 filings for rate decreases and a lot of filings for no rate change. So we are definitely trending in the right direction. So do not be scared about the Florida insurance market. You are going to be able to get insurance, and it's not necessarily going to be at a super high rate like we were seeing in the past couple years. Just some things to look out for. We've talked about a lot of these already throughout the presentation, but age of roof is one of the biggest things that carriers are going to be looking at. If you're looking at a home that has a shingle roof, carriers are typically going to want the roof to be about 10 to 15 years old. Some can go up to 20. But the higher you get up there, it is going to affect the premium, and there's going to be less carriers that will take it. Your tile, your metal roofs are typically going to go up to about 30 years old. That's what carriers are looking at. Again, the higher up there, it will affect the premium. Electrical panels, there's some that are not going to be accepted. So your Federal Pacific, your Challengers, there's different plumbing. So whenever you're working on purchasing a home, I would suggest just get in front of the insurance. There's certain things that carriers are looking for, certain things they're not looking for. And if we can tell you, in the beginning of the contract versus a few days to closing, you'll definitely be better off. We talked a little bit about flood insurance, but I did just want to mention we always recommend, whether you're in a high risk flood zone or not, I highly recommend, just get a flood quote. There's different options for flood insurance. You have your NFIP, so your National Flood Insurance Program, which is the federally backed program, but there's also private flood insurance carriers, and we work with both of them. Through the National Flood Insurance Program, you're going to have max 250,000 building coverage, 100,000 for contents. Through private carriers, you can get a lot more coverage and also add some additional coverages as well. And, flood insurance is not a one size fits all. The NFIP may be the best option for one home, while the private policy may be the best option for another home. But I highly suggest shopping for flood insurance, whether you're in a high risk flood zone or not, because at the end of the day, we're in Florida. It's, you never know what's going to happen. And believe it or not, 30% flood claims come from those outside of like your high risk flood zone. So definitely recommend, getting that quote. I think we've
I
pretty
think you
much covered
touched on
everything
everything.
else.
Yeah, you did.
I think we
Monica,
pretty
thank
much
you.
touched on everything else throughout the presentation, but if there's any questions, just let me know.
Awesome. Awesome.
Yeah.
All right, Mike, we're running out of time. So we've
I'll be
actually
quick.
gone over. You know what? Let's just, the safe home program, we can just kind of
Not gonna worry
tease that.
about it.
I want you to talk about the areas you cover so that they understand where you're at and what your market is like up there.
Well, I'm a Florida realtor, number one, and I'm honored to work with Josh and Sue and the entire Remax Alliance Group family. We cover the entire west coast of Florida. I live in Bradenton. We have Lakewood Ranch. We have North River Ranch. You know, Lakewood Ranch is the number one searched and still the number one resort destination community in the country. Been that way since the mid '90s. People want to come here for a reason. You've got everything from golf communities to with the old style golf communities, new style golf communities. You've got the resort lifestyle where you've got the. I'm not sure they've got somebody with the cart, the tray bringing drinks to you at the pool yet, but you've got the beach bar setups. We've got multiple national builders. I mean, North River Ranch. We've got the lagoon. I'm not sure if you see it. There's a lagoons they're building. We're Florida. We got water everywhere. What are we going to do? We're going to build a lagoon in the middle of the state. So we've got multiple lagoon communities being built. One up in Wesley Chapel. We got that's been there a while. We've got the one going in, and they broke ground. They're digging it.
We got one
Supposed
in
to be,
North Fort Myers. Yeah.
and they've got another one in one of them almost on the beach. But so you can live close to a beach without getting close to the beach. But multiple national builders, Dream Finders, D.R. Horton, M.I. Homes, David Weekley, Lennar, we got them all. That's the Sierra family. Lakewood Ranch has got multiple, I think 18 or 19 villages and multiple town centers. So it depends on and then we've also got downtown Sarasota, and we've got the finest beaches in the world with Siesta Key, Anna Marie Island, Holmes Beach, Bradenton Beach. We've got it all. It depends on what you're looking for. As I like to say, your lifestyle can be anywhere in Florida. You pick where you want to be. I don't care what kind of home you want. We'll find it. Because that's what makes this so nice. We've got the homes that survived the homes for the hurricane for the last 100+ years. They've been here, and we've also got the brand new construction. I mean, they approved 50,000 home sites east of 75 a few years ago. We got homes being built. We're ready for you.
All right, guys. So I'm going to just put these up here. These are some questions to kind of help you, but I'll send it to you if you guys want it. I'll send you our little top 10 things to know to help you narrow this down. I will send it to you with the replay of this if you'd like. But as I go through, does anyone have questions? Because we've gone over in time. Do we have any questions from anybody? You don't have to talk if you don't want to. You can just put it into the chat down below if you'd like, but let us know if you have any questions. I'll just kind of go over things, as we go through these questions here. One of the big things is there is a different vibe for every place. And if you have not been to Southwest Florida, to these individual places, I cannot tell you enough. You need to come and see it and feel it for yourself. I take phone calls every day with buyer consults, and they go, well, I've been to Cocoa Beach. Okay, we are not Cocoa Beach. Okay. Well, I've been to Boca. We are not Boca. Okay. You have to come and experience what Naples is like versus Sarasota. Okay. Two completely different areas that are very close to each other. We're like an hour and a half, but you need to come and feel it. So, first of all, make the trip, make the time to come down and check it out. The next thing is everybody says, Florida, I want to be at the beach. You really need to start to narrow this down in your head as how important is it for me to be near that beach? Do I need to feel like I can walk the beach every single day? Or is it going to be, hey, my friend's coming down and I just want to be 20 minutes to the beach and we can go out and go walk the beach while they're here or go have a picnic or what have you one day? You really need to say, what does my lifestyle want when it comes to the beach? The closer you get to the beach, the more you're going to pay. Okay. What do you want to be close to? Are you moving here for family? Are you moving here for golf? We have a client right now that they're such golf heavy that they want to be in a community that has 36 holes. Believe it or not, we don't have a ton of communities that have 36 holes of golf, but golf is the mandatory reason why they're coming. So we have to prioritize that. As we talked about some of those newer build communities, one of the things is healthcare. Is healthcare there? Is it going to be important to you to have regular, or is it coming in the future? Right? shopping, restaurants. I had one client say to me recently, well, we like to have a little bit of a nightlife. And I said, well, Naples doesn't really have a nightlife. I mean, like we roll up our sidewalks around 10 o'clock at night on a good day, right? Like, I'm like, so, but then nightlife, well, what does that mean? Well, we want to go walk and have ice cream and, okay, well, your version of nightlife and Miami's version of nightlife are two completely different things. So what does that envision for you that you must have? Okay. Babcock Ranch is a great area. I totally love that area. It's got a whole bunch of different types of communities, different builders. But what I tell my clients is you are off of 75. You are a little further out. They're still developing that area. Okay. So if you're feeling like you want to go to the beach is 45 minutes away. Okay. If you want to go, and go to a lot of different restaurants, you're going to be a little further out from that. They do have restaurants, but you're just going to be a little further out to get to other restaurants, airports. How important is the airport? Okay. Again, we talked about this earlier, but I really want you to envision it as you come through this checklist of, do I want to be in a really established area or am I good with a growing area? Like I said, in Punta Gorda, where you can get a better price. All right. What are your non-negotiables? Okay. Can you have a home with a pool, but it doesn't have the lakefront view? Can you live without the lakefront view, or do you have to have both? Have to. Non-negotiable. Do you have to have the 3-car garage? Which ones? You have to have a little bit of flexibility. So you really need to narrow it in. I mean, I know we have a lot of inventory, but still we have prices and budgets we have to work with. So you got to really envision what it is you want in that home. Okay. New construction versus resale. What am I looking at? Or new construction resale that we talked about, right? What is it like? How old of a home do you want? All right. Like, it's funny to me because I have people when we were selling our house up north, up in Tampa. It was built in 1985. And somebody said, well, that house is old. And I said, you're in Boston. How old is the house you're living in? They're like 120. I said, okay, well, then I think I got you. I think so. Another big thing, a lot of people don't realize here in Southwest Florida that we are second to Las Vegas, I think, or maybe we're first and Las Vegas is second to being an area that sells homes furnished. And is that important to you? Furnished meaning turnkey. Everything you see comes with it. Sometimes it can be pieces of furniture, but do you have to have that where you come in and you're literally bringing your flip-flops and your golf clubs and you can just sit down on the furniture in there? Okay. So that's something to start to help you narrow down what you want. Are you thinking you're going to rent the property? We have a lot of people who have stars in their eyes of, I'm going to buy a place in Florida and I'm going to Airbnb this thing. Okay, every community has rules and regulations. And if you're thinking you're going to rent that thing nightly, I got to tell you, there's a lot of communities here that don't allow it. Like Naples, very few communities are going to allow. I can think of like 2, maybe 3 off the top of my head. So if you're looking to rent only January through April, because that's our season, then they're more than likely going to be able to accommodate that. So what does it mean? What does renting look like for you? Okay. What's your real budget? This is the big thing, guys. Okay. What is your real budget? Not just how much can you afford for the house, the condo, the townhome. What can you really afford when you look at the HOA fees, when you look at the CDD fees, the property taxes, the insurance? You really need to have that all budgeted in so that you know what you can handle. All right. All right. Yeah. Okay. All right. So I'll put my phone number up there. You can text us. Like I said, ask us any questions that you may have. Does anybody have any questions today? I know we went over, so sorry.
Don't see any hands raised.
I know. I think they're scared.
Right?
It's
Hit the
okay.
button there. Raise your hand if you got a question.
Hit the button. Hit the button. It's all good. It's all good. I don't want to make anybody uncomfortable. I know some people get a little nervous. So no worries. No worries whatsoever. Thank you so much for coming tonight. Feel free to text us with any questions you may have. Send us an email. We're more than happy to chat with you about it. And again, thank you so much for being with us.